Boy, this is something, though, this fall in oil. And we're going to talk big picture now about whether it's a good thing, it's a bad thing. What does it mean for the economy? What does it mean for consumers and all that? Larry Glazer joins us to talk about it a little bit. And, Larry, it's always good to see you. So, boy, we don't know when this drop is going to stop. You know, as Jeff said, we would have thought a few days ago, because we've never seen the futures go down this much in terms of consecutive sessions. But what's your overall view? It seems like the president, if you ask him, he thinks it's a good thing. I mean, that's what he was, you read into his tweet from yesterday. Is it?
Yeah, I think it depends on who you ask. If you ask the consumer who's thinking about shopping for the holidays as Black Friday comes up and they want to stock their Christmas tree, it is a good thing, right? Because the decline in oil price is going to make it less expensive to heat your home. It's going to give them more disposable cash. Nothing affects the consumer more than the decline in energy prices, especially ahead of the holidays. And the holidays is so critical for retail in this country. So I think that's the silver lining here. That is the good thing. The challenge becomes the decline in energy prices could be sending us this ominous signal about global weakness. And I think that's what has investors really on edge. You know, the weakness and volatility we saw in October, as it bleeds into November, we're seeing new issues pop up. Oil really is a new concern. The potential change in leadership away from technology is a new concern. Yep. Oil's in a bear market, but so was Amazon yesterday. So I think this is where the market's really starting to recalibrate and really think through. And I think oil can be a metric for global risk. I think what's really critical to remember here, though, is you compare oil to natural gas, and they're both a reflection of demand in the United States. So oil may be more an indication of an excess of supply than necessarily domestic weakness.
Well, that's what I wanted to talk to you a little bit about, because, of course, there's supply and there's demand. And everything we hear about on the oil side is that we're just kind of swimming globally in oil. There's tons of it here in the United States. There are challenges that have come up with that in terms of pipeline and infrastructure and getting it out of the places that it's being produced. But even overseas, I mean, the hint was from the Saudis, and then we think from OPEC as a larger conversation that they're going to cut production because they have so much oil. I know the president says don't do that, but that's the issue, right? Or are you starting to see any kind of concerns developing around demand? Because that would be a bigger issue economically.
Yeah, look, there's no doubt there's a different picture outside of the U.S. than inside of the U.S. And I think that's where we contrast natural gas and oil. Natural gas gives you a very clear picture that the U.S. consumer has been in really good shape. The U.S. as a whole has been really in good shape. But internationally, that's a different story. If you look at the weakness in the Chinese stock market, look at the weakness overseas, particularly in the emerging markets, that's where that picture starts to draw the distinction. And I think oil is telling you that things are not strong outside of the U.S. They need a trade deal in China, and they need it quickly.
That's what
because they need to stabilize
we
their
had a guest
economy.
on last hour brought that exact point up. It's a good point, because sometimes people wonder, how do all of these stories that we talk about kind of interconnect with each other? And one of them is trade. So Larry Kudlow comes out today, gives the hint that, hey, maybe we're ready. Well, at least we're ready to start talking again. And the market seemed to take that as good news. It went up. Now it's giving back some of those gains. But your point, and that was the earlier guest point as well, is like, if we cut this deal, then maybe that's when you start to see the oil price decline stop, if we at least have a hint that there might be some sort of a deal, because China needs to cut one at some point.
They need to cut a deal. And I think, look, geopolitical considerations really do affect the global oil market. And I think you have Iran sanctions, you've got a change in House leadership on energy committees. All of those are sort of considerations that are affecting the price of oil right now. But most importantly, the consumer in the U.S. is 2/3 of the economy. The consumer gets a benefit from the decline in energy prices. The stock market doesn't like the decline in oil prices. It hit Exxon. It'll hit Chevron. It'll hit major stock market holdings. It'll hit the market averages. And I think it has much to do with the way people index today and how indexing has changed this disproportionate investing. There's a lot of irresponsible allocation of money here, but the quality of the underlying stock market, we're not in a recession in the United States, but oil is sending us a scary signal, and investors are having trouble looking past that. I think what's also important to consider is the market is trading on not just risk on, risk off, but China trades on, China trade talks off. And if we can get through China and we get through the balance of the year, we may have a much more favorable environment. Gridlock is good for the stock market, provided we get a little bit of a tailwind from some of these other considerations.
Every little headline on trade, and it was true today. Every little headline. That's why it's so important, because it all connects. Larry, good to see you. Thanks a lot.
My pleasure. Thank you.